Morning all and welcome. This is Zach from Trading Matrix. In this video, we're going to be taking a look at a few of the Australian indices and then towards the end, the Australian dollar. And I'd like to give my take on where I believe we're headed in the near future and medium to long term. Before we take a look at a few of those pairs, just the indication of the analysis type and the way I'm drawing these conclusions, it's based off wave theory. That is, the market moves in these impulses and corrective patterns. These corrective patterns, when identified correctly, you're able to enter the market around here and actually hope to catch the following impulse. That's essentially the basis behind all this. And what I would like to note is that a lot of the indices that are currently dropping and have been dropping over the past 2 weeks, 2 to 3 weeks, they're actually all in line to make very similar patterns and all show that we are in the C wave down before we get a reversal to the upside. So starting from the XJOs, the SMB against the ASX 200, what is very evident is that we've got our impulse from this side over here. And then in the 2007 or 2008 global financial crisis, we had a massive drop down. This is what's known as our A wave. Over the past 10 years or so, we've been in our B wave corrective structure. So this is a move that doesn't happen too impulsively. It's very corrective with a lot of ups and downs. Market usually just corrects this big drop over here. What's been happening in the past 2 weeks is actually the start of the copying or the matching of this original A wave here. And that's just represented by this drop to the right hand side. Now, how deep this drop could go is anyone's guess. I'm not going to say that I know exactly where it's going to stop or what it's going to do. But what I can tell you is that this is very indicative of C wave characteristics. They're very impulsive and they go in the opposite direction of the trend. So what we can expect for the next maybe coming weeks, coming months is more downside over here. But what you're going to look to see at some point, I mean, you could draw some support and resistance lines maybe around here or even essentially anywhere around this time frame. And once it does reach that low, we're going to be expecting some form of a reversal setup over here. That reversal setup will, and I'd say wait for this reversal setup to happen. Otherwise, you're just going to try catching the bottom, and that's pretty tricky and can be dangerous. Wait for the market to actually give you that impulse to the upside, a corrective pattern like so, and then you can start purchasing or start going long again. What I'd also like to note is the time frame difference. So if we were to zoom in a little bit, get rid of this. So on a weekly time frame, the previous dip or the previous move down took 504 days. And over the past 2 weeks, we've actually moved, so just for comparison, say 3 weeks actually, we've moved 22,755 pips. That 22,755 pips previously, so 22,000, to say roughly around here, in the GFC took 315 days. We've done what happened in 2008 in 28 days. The reason I point that out is this previous A wave took 2 years, or essentially just under 2 years, so 511 days. The fact that this is moving extremely impulsive in comparison, I don't believe that this impulse will actually take that 2 years that it did before. All we're looking to see is something that's in the same size, I guess in regards to price action that happened previously. The way that this is going, if this was to continue down, somewhere around potentially halfway through this year or towards the end of the year, we could see the start of the reversal and the completion of this extremely bearish move down that I believe has been exaggerated by the media and fears that people are going to be losing money, for this to start moving back to the upside. Again, that's just an assumption that I'm making there. What you would actually need to see from the market to confirm that is an impulse, your corrective pattern over here, before that is valid and to go to the upside. And that impulse and correction should happen on either a 4-hourly or a daily chart for you to be confident that this is going to move up. Moving off to the Warlords, you can actually see that the pattern itself is very similar as to what's happening there. And that's what you're going to see with a few of these pairs, excuse me, that we've had this impulse to the upside. 2008, we had that GFC, so that massive drop. Over the last 10 years, we've been correcting. Now we're receiving that second C wave down to the downside before we receive our reversal to the upside. Similar to what was talked about before, this could continue down all the way to this horizontal. I don't think it will, because that's a very large move over a short course of time. Anywhere, I guess, in these support and resistance lines, if you wanted to draw that, that could reverse. What you would need to see is an impulse, a reversal, correction, before we start going longs. So that's for the all odds. C wave, wait for that reversal, let's catch in, and you can start going longs on all these pairs. Because this bearish move that's going down, I feel as though it doesn't have much traction in regards to what happened before with the GFC. There was a lot of things, the bubbles going out of place and people losing money. This is more of previously this was more of a demand push thing, where this is more of a supply with China's coronavirus. Again, with the S&P ASX 200 fund, almost exactly the same pattern. This is your A, this is your corrective B. We're in our C wave. We're waiting for this to give us enough information to say we're ready for the reversal before we swing back to the upside. Oz 200 fund, again, I mean, all of these are following very similar characteristics. They might finish in different ways. And what I mean by that is some might actually come down to break this low, creating what's known as an expanding flat before moving back up. Some might just stop here to create the running flat before going up. I mean, it's anyone's guess where this stops and moves up. But they all look to be in that C wave impulsive move down before we get our reversal to the upside. I'd like to move over to the ASX, and we'll look at a few of the US indices. Starting off with the ASX, what I'd like to note is between these peaks and this peak, we have no divergence. So the probability of more upside is high. That means we can expect one more upside. In regards to the trend lines themselves, this lower time frame trend line, so weekly trend line capturing from, I guess, January 16th to where we are now, is starting to break. As you can see here, there's a few options as to what could happen right now. With the amount of growth or the speed at which this has gone, so as you can see, momentum to the downside has grown. What I would like to see play out is a corrective structure on this trend line here. So something like this, that would confirm more downside to play out. Because as we stand right now, if we were to move to the weekly time frame, I will say that I don't think this is extremely likely, but this in itself is still a valid pattern play out. We could definitely see this just being our WX, an impulsive Y to the downside. We get our reversal. This could sit somewhere around here for a couple of weeks before we just continue to the upside. Obviously, that's just the idea, and we'd have to wait for this reversal to actually play out before that could happen. But if we were looking at that downside, I'd like to see a corrective structure like this around the trend line play out, so we could actually get more of that downside. That would mean we could have, use this right, WX, Y, X, Z, or 4 more upside. Or we could stop here, get this reversal, and then go to the upside. The ASX in itself is a bit different from the US indices, and later on in the video, I'll look to tell you why. But no divergence on our daily timeframes. So that means no divergence on weekly and daily timeframes. So we can expect more upside. However, it does look like we're going to go into some corrective structures here, maybe even come back to this bottom trend line, creating something like a pullback as such. If that were the case, then once we receive this trend line, we can look to see more upside. What happens here will be very telling as to where we're headed in the longer term. So for the next couple of months, let's see how that plays out. It's more probable to expect more downside. Okay, so the Dow Jones. So the Dow Jones again, so there isn't any divergence, except for this last piece that's actually played out here, where there has been quite a bit of divergence. If you go to the daily time frame, let's just move to there. Within this final piece up, you can see how much divergence there is. So this piece in itself could mean much longer downside for the Dow Jones. What I would like to see to confirm that is a corrective structure on the trend line before we see this continue. How deep this could go, not really sure. One way you could forecast this is you could look at this being a second play out. So if we were to get a corrective structure over here, this being your A, this being a B wave, coming all the way back down to C, before more upside, giving you a 1, 2, 3, 4, 5. At the same time, this could be complete and we could be creating a completely new structure over here, where this is your first impulse down. We get a 1, 2, 3, something like this, before more downside, and then we could go to the up, creating a much larger corrective piece that will take much longer to actually recover from the original move down. So with the Dow Jones, definitely more downside to play out. That's the only way I can see that. So a lot of these pairs, there's more downside to play out in the coming weeks. But with the Australian Stock Exchange and a few of the Australian indices, these all look to be just C waves, so short time frame impulsive moves to the downside before reversals back to the upside. So the S&P 500, again, you can see how much divergence there is between these pieces and these pieces, and the growth in MACD that we currently have. If we were to get more consolidation at the bottom of this trend line, you can definitely expect more downside. This could continue to drop and then correct even lower, something like that. So continue to drop, break that trend line, very strong conviction, get a corrective structure here, and then even more downside. Nasdaq's got divergence the whole way throughout. So this could be like a weekly consolidation or a weekly pullback or deep move to the downside. So this is our first move. We get something like this and even more trend continuation to the downside. Let's just move to what's happening here. Again, look at the amount of divergence growth here. The way that this is moved, extremely impulsive. I mean, if the market wanted to consolidate on that trend line, perfect. I don't see that reversing completely. There's no real reason for it to reverse because all of the pieces previous don't show you that this could be matched up with anything. More downside. Watch this set up underneath the trend line before continuing. One last thing I wanted to touch on was the Aussie dollar. Okay, Aussie dollar is in an interesting state. So with all the indices, as I just spoke through, we're in that impulsive C wave down. This is what looks to be the last piece of the pattern. before we get reversals to the upside. And if that were the case, that means Aussie and the Aussie dollar, I'm not saying that they're 100% correlated or this is going to be the cause, but Aussie dollar should also see the upside. And I'd like to give you some reasons as to why that's very probable. So if we were to say that this is our WXY, so this is our impulse, correction, impulse, no divergence between these pieces and these pieces. So we can expect one more up to break this top. Over the past, say 9 years, Aussie has been in this downtrend or pullback. And the reason I say pullback is for a few things. On a weekly time frame, or actually even on a monthly time frame. So again, no divergence on the way up. But look at the amount of divergence we've actually got on this. So we have our A. So this would be our A. That crossover is our B. This is our C. Go back to price. So that would be A, B, C. Move to a weekly time frame. Let's get rid of that. Okay. In itself at the moment, it does look like we're going to be seeing more downside. So this is our W, X, Y. Once we start consolidating and dropping more, the MACD growth on the daily time frame will then become prevalent. So you'll be able to see that more clearly because right now it's actually just cleared that. So in this piece in itself, you can definitely expect more downside. On a weekly time frame, I'm expecting it to hold. But what you then come to see is that the divergence as a whole and the pattern play out that you'll see here will start being indicative of these shorter time frame drops, which should then create some form of an ending pattern before we see a reversal to the upside. That's how I see Aussie playing out. If we were to draw a fib sequence as well, we're very near the 786 and the 886 of this impulse. So the 786 being closer and the 886 being around what I drew here. Obviously, they're just fib sequences. It doesn't mean the market's going to respect that. It's essentially just some random lines on the chart. But on a higher time frame, we're expecting one more upside. So moving down to the lower time frames, yes, there's more sales to come, but when that's completed, we should see a reversal to the upside. The way this is going, I'd like to see this maybe take a climb to the upside one more, give you something like this, continue down to the low. That would be really nice if we got that upside, because then we could see this is our 1, 2, and then start to see our 3 before we go up. Okay, so in summary, a lot of the pairs or a lot of the market itself is starting to play out in a bearish form, so looking for more downside. However, a lot of these downsides on a few of the Aussies is just matching what's happened in the 2008 global financial crisis. Although they're moving extremely quickly, I wouldn't be too worried about the economy as a whole, because it still looks strong. And from a technical standpoint, a wave theory standpoint, this is just our C wave moving down before we get our reversal back to the upside. So I guess hold on to your horses, or if you're selling, well done, keep selling. But when you start getting those divergence and the signs that we could be starting that upside, close your sells and start looking for longs. That's it for this video. Hope you guys enjoyed and possibly learned something. I'll see you in the next.